Here's the truth about business funding. Most entrepreneurs either ask for too little or too much. The key isn't just getting funded, it's knowing exactly how much you need and being able to prove that to a lender. Today, I'm going to show you how to calculate your real funding need and what documentation lenders will actually require from you, so you'll be ready to go. So let's talk about why getting this funding number right is so critical. If you're underfunded, you're not going to hit your milestones, you can't hire the team you need, you can't execute your marketing plan, and worst of all, you're going to run out of cash before revenue catches up. And when you're desperate and out of cash, you might end up accepting terrible terms or even have to shut down the business. But overfunding has its own problems. With equity, you're going to give away more of your company than necessary, and nobody wants to do that. With debt, you're going to be paying interest on that money, and if you don't even need it and you're not using it, that's going to erode your cash flow, but it's also just expensive. And here's what people don't talk about. More money often leads to sloppy spending and less discipline. What you want is the right amount, enough to execute your plan with a reasonable buffer, right? And we'll talk about what that is, but not so much that it creates a drag on your business. How do you go about figuring out that exact number? Well, it starts with understanding 4 things. You need to understand your current cash position, your monthly burn rate, your growth milestones, and then that cash runway, right? How much cash do you have to accomplish all those things? The good news is that all of this lives in one place, in your financial forecast. Let me show you exactly how this works, and we're gonna use LivePlan. This is gonna really give you an idea of why you need to do this and how cool it is when you get that right number. Okay, so right now, what we're looking at is a coffee shop, and you're seeing the projected profit and loss for this coffee shop. And I want to point this out because with this profit and loss, you see in year 1 of this coffee shop, it's a startup, it loses $10,000, pretty normal for a startup, but it starts to make some pretty good money in years 2 and 3. Again, pretty normal forecast, but this has nothing to do with my cash, right? I'm going to be profitable, but do I have the cash I need? How much cash do I need? How do I determine my funding need? So let's jump into our actual financial tables. And you can see here that I have revenue, direct costs, personnel, expenses. It's all the things that I need to really understand and have so that I can get that cash picture. Once I know how much revenue I'm projecting, and you can see that here, what my direct costs are, who I'm going to hire, what are those expenses? Am I buying assets? For my coffee shop, I probably am, right? Big expensive espresso machines, maybe some furniture, maybe there's some taxes, other implications, right? And then we go to our cash flow assumptions. This is that first step in understanding your funding needs. Am I going to get paid immediately? Am I going to wait for payment? And how am I going to pay my bills? You set those cash flow assumptions, and once you set them, it's going to help you make sure that you understand that cash position. So now I've done that, and I've set my purchases on credit, my days to pay. Now I get to come to this really cool financing section. What I can see here is that I actually do not have enough cash or funding to start this business. And you can see that right here. I end the year with a negative cash balance of over $15,000, which isn't really possible, right? What that actually means is I've bounced checks, I'm bankrupt. But that's okay because this is my plan. So now I know that in order to get going in that first year, I need $15,000. And I know that because I've put in my revenue, I've put in my direct costs, I've put in my personnel and all of my expenses, and LivePlan has helped me understand how quickly my customers will pay me and how quickly I'm going to pay anyone I owe money to. So I have the whole picture, which is what you need to know how much funding you need. So $15,000. Now I am going to add some financing. funding. For this sort of scenario, I'm not going to go to investors. It's a coffee shop. I don't need $1 million. I need, somewhere in the range of $15,000 to $20,000, depending on how much cash cushion I might feel comfortable having. So I'm going to add a new loan. And for that loan, I'm just going to title it loan. So now I'm going to choose, when am I going to receive this funding? Well, this is a startup, and I think I'm going to need the money pretty quickly. So I am going to ask for the money in the first year and that first month of this plan. And how much am I going to receive? Well, you saw that I'm negative $15,000. That's at the end of the year. But I can actually go back and I can look, and you can see right here, I can look at my monthly, and I can see that it changes month to month, and it culminates with that $15,000 at the end of the first year that I'm running this business. And I really like actually seeing every month, what does it mean for my cash and my cash runway based on that burn that we talked about, right? So this is a really cool view. Now that I have that in my head, I can jump back and I can add that loan because I know kind of basically where I am. And that's the important part. I'm not guessing, right? The guessing is just in putting that forecast together, but now the forecast is telling me how much funding I need. So I'm going to put that in, and I'm going to put in $25,000 because I want to see a little more kind of cushion and reserve just in case. And maybe I'll pay that off sooner, but for right now, that's going to make me comfortable. So how many monthly payments am I going to make? Well, I'm going to get a 5-year loan because those are pretty common business loans. So that's 60 months. And unfortunately, the interest rate these days is more than we'd like, which is why you don't want to get too much money in loans, right? It's going to cost you too much. But I'm going to do an 8% interest rate. And then I'm going to create this, and I'm going to exit out of that. And I'm going to have that $25,000 in there. Now that I have that, I'm going to come over to my cash flow, and I'm going to look through here and see where I am, and was that enough? This is that determining how much you need part, right? I think I want some reserves. I don't want it to be too close to the bottom line. I don't want to have hundreds of dollars in my bank account at the end of the month. I'd like to have a few thousand. So now I'm going to look at where I am and my projected cash flow. So you can see right now in my projected cash flow, I can see the cash at the end of every month, and I can kind of scroll through here, and at the worst of it, it looks like I'm getting down to about $4,000, which is feeling really comfortable for me. And that lets me know, okay, great. That loan for $25,000 is exactly what I need. So the key takeaway here is that a solid forecast is everything. You saw that, right? I need the forecast to understand my financing needs. And if you want a tool that makes this whole process much faster and easier, we've got a special offer for LivePlan. The link in the description will give you 50% off your first month. It's really worth it. Lenders aren't just gonna take your word for it, right? I mean, we'd love that, but that's not the world we live in. They need documentation and proof. So here's what you need to prepare. First, collateral. Most banks want assets pledged, and you'll likely need a personal guarantee. It means that you're gonna have to have good credit. So think about that and get all of that ready to go before you think about going to a bank. Now, the next one, a complete business plan. The lender needs to know that you understand your market, your model, and your path to profitability, right? We showed that, we talked about that. We saw how the first year wasn't profitable, but then it was profitable. Now, third, they want detailed financials. They want income statements, that profit and loss, right? They want balance sheets. What are your assets? What are your liabilities? They want a cash flow statement, which is what you're looking at right here. It's your cash flow statement. If you've been operating for a while and you're not a startup, they're also gonna ask you for 3 years of financial history. So make sure you've got that ready to go. They'll ask for your accounts receivable and payable aging, right? If you're an existing business, that means who owes you money and who do you owe money to. And then your personal financial statements, proof of insurance, and tax returns. So it's all kind of bundled in, you personally and your business. And sometimes people don't understand that lenders are gonna look at your personal finances as well. Because at the end of the day, you're the person that is getting the loan, right? The business is hopefully making the money to pay off the loan, but you're in charge and you're the one who's guaranteed. Here's the one that catches people off guard. Loan covenants. These are financial ratios that you must maintain, like your current ratio or debt to equity. If you fall below them, you could trigger a default. What you're proving with these ratios is current ratio, that you don't have too many liabilities, right? That you actually can make this go with your cash runway. That's what your forecast is all about. And then debt to equity, right? That you haven't put too much debt on yourself and you can't dig out of it and you don't have enough assets to cover it. So it's actually pretty simple. If you do what I'm showing you, you'll be in good shape. The bottom line, don't wait until you've found a lender to pull all of this together. Put these documents together, have it all ready, and then you can start the conversation and you'll be ready to go quickly. Now, that's a lot to keep track of, but being prepared makes all the difference. If you're finding this breakdown helpful, please give this video a like and subscribe to the channel for more tips on funding and growing your business.